Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. We're going to start with the euro against the dollar. A third bearish black crow yesterday, and a close back below the middle time of the 2021 bearish Andrews pitchfork, currently at 119.13, after the previous session's close right on it. We finished the session in the midst of the seemingly light, lesser Fibonacci congestion at 118.97 and 118.87. Below we have the gently rising long moving average, currently at 115.25, now really entering the frame. Please remember, last week this moving average, in association with the June 2018 high at 118.51, held up the market. We also still have target X a little below, in the 118.05 area. This is the target for the action in 2021 so far, being a halfway hesitation. I've recently been minded to think that the market came so close to it last week that you might call it reached. However, that does not preclude further attempts to fully capture the target. So far today, the market is capped by the middle time overhead and yesterday's low at this time, but it hasn't stopped the market testing both the middle time at the moment. Cable, aka sterling against the US dollar. I suppose you could call yesterday's action a third bearish black crow and a continued follow-on lower to the recent interesting key reversal down. However, I am not inclined to do so. I look at it more like a hammer action, usually seen as bullish about 60% of the time. The long tail below was the result of a bounce back up from the market approaching a little too closely to the short stroke medium moving average, currently at 137.89, and its partner, the start of the November 2020 to date uptrend, currently at 137.63. Overhead, we have the supremely important middle time, currently 139.87, of the late June to late September 2020 bullish shift pitchfork. Now, this middle time, along with the lower time below, currently at 135.28, have given the bullish angle of attack of this market since September last year. So far today, a little higher, seemingly justifying the bull hammer pattern designation so far. Euro against sterling. A really interesting, expansive second bearish black crow, the long tongue on top, but not that much of a tail below. Looking like it might belong to the inverted hammer pattern or even shooting star pattern categories, but not quite making it. All this is still about how the market approaches the two targets below. Target X2 for the second quarter of 2020's head and shoulders top, that's in the 85.15 area, and target X1 in the 84.75 area, the target for the recent sideways triangle. We've been waiting for a while now, and patience has been wearing thin due to the lack of progress lower. So far today, a nervous continuation lower, breaking the low of 3 weeks ago and the lowest low since February 2020. It also might set up the stall for a new pattern, a possible descending triangle, but it is too early on that, and that idea right now completely. We'll just have to wait and see. US dollar against the Indian rupee. An indecisive doji cross yesterday as the market seemingly realized that it has exited the recent proposed descending triangle and is wondering if it will be a forced break lower or the real thing. The market has capped on the overhead by the 50% Fibonacci line of the July 2019 to April 2020 move at 72.64. Meanwhile, below, the September 2019 high at 72.41 plus uptrends from 2018 and 2020 helped support the market. Overall, we have overhead the declining partnership of the middle time, currently 72.83, the early November 2020 to late January 2021 bearish Andrews pitchfork, and the short medium moving average, currently at 72.93, joined now by the short moving average, currently 72.84. Below, we have a mess of support between 72.41 and 72.05 until we reach the descending lower time, currently at 71.91. Finally, we still have a preliminary target X on the downside in the 72.05 area for the descending triangle. It lines up with the February 2020 high. A full optimal target X1 would be in the 71.20 area. So far today, obviously not much. A slightly higher market, but looking like an indecisive doji cross right now. US dollar against the Brazilian real. An indecisive doji cross, possibly with ambitions to be a bullish dragonfly doji. It was an interesting choice to make after the previous session's key reversal up. Below, we have the support of the lesser 38.2% Fibonacci line of the May to June 2020 mover, 552.90. Now this lesser Fibonacci level is interesting because it provided the flat trend line necessary for the recent bullish ascending triangle. Overhead, we have the lesser 38.2% Fibonacci of last week's move at 565.90. Now this provided Monday's high, interestingly enough, and the 50% Fibonacci line beyond that at 570.10. US dollar against the Mexican peso. A really interesting indecisive doji cross yesterday. Something I would never actually thought I would ever say. The market dipped its toes below the combined support of the lesser Fibonacci level at 20.60.62 and more importantly the very recent 50% Fibonacci line at 20.54.89. Both had previously held up the market. However, the market did not like it down there and retreated back up to close virtually unchanged. So far today, another dip below. Less of one this time, and another retreat back up. Less of one also. This is indecision again today, and it might be interesting to see what happens when the market finally makes its mind up. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here is the final bit.